Hey everyone, welcome to December. You know, it is the last month of 2025. It's hard to believe that it's here, but it is. And as always this time of year, I look forward to the new year and what does the new year bring. I hope this video really helps you. If you're making plans for next year, maybe buying a home, selling a home, or both, I really hope that this will give you some good insight as to your timing and what the market might look like. None of us have the crystal ball, but I think what you see here will give you some indication as to what the market's going to look like in 2026. And believe me, it does look better than I would have thought. If you would have asked me 2 months ago, Rob, what do you think the market's going to do in 2026? My answer would have been, I think it's going to be flat or maybe even correct in pricing. I mean, we've seen higher levels of inventory come on the market in recent months. We've seen some price softening, certainly in some segments of the market. Condos, townhouses definitely have seen price softening, and some of the newer developments have seen price softening. So I was less optimistic, but something has shifted. And you know, when these things shift, you can't always put your finger on exactly what it is. It's a number of things, but I will probably say the biggest thing that's in common that causes markets to shift and go the other direction from correcting into more of a stronger market is the word confidence. If buyers feel that they have the confidence to make a purchase in real estate, they feel that confidence that that this is the right time. And when enough people feel like it's the right time, the market moves. And I think that's what's happening. I think there's a lot of people that feel good about going into 2026 in Calgary, in Alberta in general. And I don't know how much of an impact this will have, but usually there's always a correlation with oil and gas, just because we are an energy province. But you know, we have an approval to possibly, you know, attract investment to build a pipeline. And that might be years away before it ever happens. However, it signals confidence. So those are the types of things that can give people that feeling like, hey, this is the right time to get in. So looking at this chart that you've all been staring at while I've been talking, you will notice that in the blue here is the months of supply. And you notice I've got this yellow line going through, and I've got circles in pink. And I want you to see this because you'll notice that the inventory levels that we're currently at are pretty normal, because we had them back in 2010, 2012, early 2015, late 2014, 2016, 2017, late 2020, 2021, and now here we are in 2025. So you notice when we were out of balance, where we had too much inventory, was in late 2010, 2011, 2015, late 2015, early 2016, late 2017 into 2018, 2019. Definitely during COVID, we had a lot of inventory. And then, of course, after we came out of COVID, we had tight inventory. So I wanted you to see this because you can see that we're really more of a balanced market. We've seen higher levels of inventory in recent years, but this is not a level of inventory that should cause anybody concern. And I can tell you by the way things look, just, because I'm in the business and when I list a property and I see how much response we get, how many online views, running a brokerage, I can see how many deposits are coming in and what product seems to be moving. So I have my hand on the pulse of it more than most people, and I can tell you the wind is shifting, and it's not like it's it's moved into seller market territory at this moment. But I've been doing this long enough to know that when I feel the wind shift, I know something's up. And we have been busier than normal in November and busier than normal in December, and this is a good indication that 2026 is going to be a strong market. So tune in for the rest of this video. I think you're going to like what you see. So let's look at the hard numbers. Here we are in 2025, right here, November, And I'm just going to grab my highlighter here so you can see it. There's 1,553 sales in November of 2025, and you can see that's down 13.39% from last year. But November 2024 was an above average year. So 1553 is a normal year for Calgary. Nothing really to worry too much about. You'll notice that for the whole year, we're down 15.69%. So right now we've sold 21,631. Now remember, this is only on the MLS. This does not include the properties that builders sell. So there's another market there altogether. We're just counting the resale listings that have been on the MLS. So that's not that's not the bottom falling out of the bucket. That's just a little bit less volume than we saw in 2024. And 2024 was an above average normal year. The inventory, you'll see right here, we're at 5,581, and that's up 28%. And that's really where we're feeling it. We've seen some properties in the last several months that have not sold, and it's given buyers a choice. And when buyers have a choice, they're going to go after the best choices. So some people have put their properties on the market, just did not get the price that they were hoping for. Many of those people have given up because they just felt like their house commanded more money. The market wasn't willing to give it. Those people will probably try again at another time, and that's fine. But the good news is there were still 1,553 transactions. So if you were successful, it just means that your property, had good value, and there was a demand for that. And if you didn't sell, you have to really evaluate: was your price out of line? Was the condition of your home, could it have been better? Could you had stronger marketing? These are some questions that you have to really evaluate if you're going to go back on the market and revisit that again. Because I can tell you, it's usually one of those three that I just mentioned. Anyway, months of supply, we get 3.59 months of supply, okay, 3.59 months, and that's up 47.96% from a year ago. And that's just what I said about how if you have a choice, then, when you got that much inventory, some stuff is going to sit. That's just how it works. Sales to new list price, it's good to look at this, although I wouldn't put a big heavy weight on this. 97.36% of asking price is what most properties have sold for, compared to last year, which was 98.52. But please remember, and I always say this in these videos, remember that many of these people had a price reduction first, and then it sold for maybe 98% of the asking price after a price reduction. So that number is not entirely accurate. And you'll notice here for the month of November, the median price, or the benchmark price, which I look at a little bit more carefully, was $559,000. Of course, that includes condominium. So let's drill down into the detached houses here. You'll notice that the absorption rate here was 33.67%. So, so a lot of homes that were listed didn't sell in November, and that might not look like a great number, but we are considered to be in a balanced market at 33.67%. And what that means is, if you're a seller, if you're positioned properly, you should have no problem selling. The benchmark price in November was finished out at $733,000 for a detached house. And that's down 1.53% from October, and we're down 2.15% from November of 2024. Now let's go in here and look at the hard numbers. So there we are, 823 out of 2,444 sold. And that part of that, just remember, is cyclical too, because it is less people want to move in the winter time. So you're going to find that these numbers will, drop down. But don't forget, if you're a seller, if you decide you want to list during the winter months, one advantage you can have is there's less inventory to compete with. You're going to see that number seems maybe a little bit high, but really, you'll find come spring, February, is really when the spring market starts. You'll see that number probably go up, but you'll also see the demand go up too, just because more people like to move when it's warm. Right now, we're averaging 45 days. People ask me that all the time. How long will it take to sell my house? Well, on average, it's 45 days. And the sweet spot for a detached house in Calgary is still right here, $600,000 to $700,000. 25% of all the people are buying homes in that price range, and there's quite a bit to choose from. And the next biggest price point is right here, $700,000 to $800,000. This right here is considered to be affordable for Calgary for a detached house. And you can see how every month that 500 to 600 drops down, and now 400 to 500 is only 4.2% of the market. And over here, 1 million to 1.5 million doing well, 10.38% of the market in November. So we've had a lot of properties sell this year in the luxury market. So it's actually stayed relatively strong, and that always surprises people because we always hear about how a lot of people are struggling, and there are many people struggling, but there are also many people who have done very, very well financially in recent years, and they've moved into the luxury market, and there's a lot of trading going on in that market. And the other thing that may surprise you is I see the contract, so I know a lot of these properties that are over $1 million, the buyer doesn't need any mortgage financing, so that is not uncommon to see. Now we're looking at the semi-detached market, getting awfully close to the buyer's market at 30% of the houses listed sold. The benchmark price $671,700. Just always remember that number is high because there's a lot of properties in the inner city that sell that are semi-detached. That's 166 out of 546. So it's staying, I would say, reasonably strong. Not a lot of change. 46 days on the market. You can see the sweet spot is 500 to 600. But this is why the benchmark price is high, because 800 to 1.5 million, there's a lot of movement here, and there's a lot for sale. You will notice there is a high amount of listings right now in the inner city because a lot of small-time builders have built these semi-detached, tore down the old house and build in 2 or build in 4. But I got to tell you, I just recently worked with a buyer, and I was out looking at a lot of semi-detached. I was in Altadore, Killarney, West Hillhurst, all of the more common areas to see these, and we saw all of them. And I was disappointed by the quality of some. Few were done extremely well, and I'll give kudos to whoever built them. They did a great job. But there were quite a few, more than I would have guessed, that you looked around and you could see this was not well designed. It looked like the quality of work was not where it should have been, and they're trying to get $1.2, $1.3 million for that. And I mean, you look at them and you see them, they're not selling. So, people aren't stupid. You walk in, you can tell. So, to me, that's not a market problem. That's a quality problem. All right, the last is, of course, the apartment condos. Their benchmark price came in at $309,300, and we are definitely in buyer's territory here. We have a lot for sale, and but I got to tell you, same thing like I was mentioning before about inventory that's not very good. I was also working with a client recently looking for an apartment condo in Airdrie, and there was quite a bit for sale, but boy, there was some not so good condos too. So, some of that, it's just not going to get bought up because the value just isn't there. They're just not in a good location. They don't look good. Only 307 out of 1690. I mean, that doesn't look good. I mean, that's definitely a lot for sale and not enough demand. I think we're all hoping that changes again next year. And, unfortunately, when the market shifts and goes down, condos are usually the first to go. And then, of course, when the market shifts again and starts to go back up, condos are the slowest to react. So you've got to be prepared for that. But at the same time, I got to tell you, the best time to buy is when the market is slow. And I don't know why people wait and wait for what they feel like is there's the confidence to get in, and so often they wait to the point where it turns into a seller's market again, and then they're